some of the friends cannot be here, and so we will like share like the short videos with them. Everything will be confidential. Yeah. So and then next slide, please, Zikun. Yes. So first of all, about what is Connect now. For us, we connect you, the person who are willing to learn and who really up to make something different in life. And we also connect you with really experienced speaker and like Andrew. He has like years of experience in the investment. And so that's therefore Connect now is here. And we are the business club, and we provide knowledge, project and demand matchmaking, and opportunities. So this is like the community where you can really learn and connect. So next slide, please. And this is a quick glance about all the events, most of the events we have done. And of course, now we're having online event, right? So the next slide. Yes, so if you actually have interest to really get to know more about our business and investment community, feel free to engage us. We're mainly like working with people who are professional with your industry, and or you are the business owners, or you are private investors, or you are the person who are thinking about to run your own company, or project managers. Yeah. Okay, next slide, please. And now, you know, like this is our like the real reason we gather together. It's really like to hear the insight from our speaker. His full name is Andrew Bowers, and himself already has 35 years of the international experience as the investor, stock trader, and hedge fund manager. And so himself, it's not only put himself in the game, but also the investment coach. He directly already coached more than 1,500 investors. So he's a person that willing to share and have very sharp insight and very straightforward, like most of the Dutch businessmen. Yes. Okay. So that is actually like my part, and to really give you all the overall picture about how the event gonna look like, who is Connect now, and I'd like to connect our speaker with each of you. So the microphone is yours, Andre.
Okay, thank you, Gabi, for introducing me. Thanks again for visiting this website. Of course, we have to do this in English. I'm used to speaking Dutch normally nowadays. Probably you are used to speaking Chinese, so there is a difference, but I guess we can all try and understand each other by English. Thanks again for giving me the opportunity here. We've done this before, Gabi. We've been in contact for quite some time now. And last time, a month ago, I had a presentation called Invest Now, But How? That was the question. I made an updated version, and I'm more than willing to spend a little hour of our time for explaining what investment nowadays look like, what the challenges are, and what we should do. Okay, well, first of all, there's a disclaimer. This is in Dutch, so I can skip this one, but please make sure that if I do anything like giving or telling you something to do or not to do, that's all about education, not about an advice. Again, education purposes only. Examples of trades are meant for illustration purposes only and should not be seen as advice to buy or sell a financial product. So this is a short version. Okay.
Sorry, Andrew, we can't see a slide yet. I don't know. I can't see that. What about you all?
That's an interesting one. That's an interesting one because that is because of Zoom. I'm sorry for that, but can you please call Tom for me?
No problem. And what I can also do is, Andrew, I can share your slide. What do you prefer?
Yeah, that's okay. That we can do, but we need to make sure that we are on the same line, same page again. But since you can't see me, this is a different one. Yeah, it's a little bit complicated because I gave my phone away to my wife because of this medical issue that the doctors is going to call me. So as I explained to you, did you tell the audience already or not that I maybe?
Now we can tell them like maybe, right? You know, yeah.
Now, just to explain a little bit, there's a medical issue running in the background regards the situation with regards to my mother. It's all personal, but the point is the doctors will call me, and they told me anywhere around 2 o'clock. So anywhere with a doctor, 2 o'clock can be 2:30 or anywhere else. So I gave my phone away to my wife to get the first contact. So therefore I cannot call anymore. But I think we're fixing this problem now.
Got it. Yes. Yeah. And
Yeah.
so yeah. And what do you prefer? I will. Let's like go like this way.
Now it should be possible. I hope you can see my screen now. I see
can.
somebody's working on my computer trying to solve this problem.
Somebody's Tom. I hope it's Tom. Right?
Yeah. Tom is busy.
I sent Tom a message.
Okay.
Okay.
He's working on it. I can see he's running my computer now, so it should be okay.
You want to now use my slide?
Should show the video. You can see me now. Share the screen. Should be screen 1.
Yes.
Okay, you can see me. Perfect.
Yes.
Okay. Well, sorry for the delay. And anyway, so okay, let's start the presentation. Invest now, but how? What are the topics for today? I want a very short introduction of the Beleggings Institute, our company, challenge of investment in today's environment, your or our strategy, and a quick scan of financial markets. And of course, I take with pleasure your questions. This is a bit about our background. We do education and information for private investors. We started in 2011. We trained more than 25,000 people, and most of them are very, very satisfied with an average score of 8.7%. My personal background, I have 35 years of experience in international markets. I do asset management, fund management. I develop strategies for big institutions. And since 2000, I'm busy with education for private investors. I like to share my knowledge, experience, my mistakes, my winners, my losers, everything. I try to be very transparent in this respect so that everybody can learn something. I've participated in the Dutch investment debate. I may say that I'm 5 times winner of this Dutch investment debate, and I'm a founder of Alex Academy, which was the first broker in the Netherlands. Okay, here you see me behind the screen in the studio of RTLZ. So we've been exposed to the Dutch Telegraph, which is the biggest newspaper in the Netherlands. We've been running concepts together with RTL. And yeah, this is a bit of a short overview. Now, by the end of my presentation, I will tell you a little bit about a coaching program that we've developed together with Gabi and Wen of Connect Now. And I think it might be an interesting one because what the goal of this 1-year coaching program is that after 1 year of coaching, you can manage your own portfolio in the right way. So you learn something by taking part maybe of a coaching program, and I'll explain a bit later on. Fine. Well, first of all, misunderstanding. It says that investment in stock market is scary. You can lose all your money. You have to be involved every day. It will cost you time. It's complicated. You have to follow all the news. I know people who lost a lot of money, and I know people who made a lot of money. And basically everything is probably true with regards to these last 2 lines. However, what you do need, according to my experience, what you do need to be successful is a clear strategy. But not only a clear strategy, you also have to understand how it will work out in good, but also in bad times, because every strategy, no matter you have 35 years of experience or whatever you have, every strategy has pros and contras. So you need to understand how the strategy will work out over time. Plus, you need the discipline and the correct mindset. So this is what I'm trying to teach people, how you can develop a clear strategy and also be disciplined and have the correct mindset to make it successful. What we call it, it's basically based on the 3 M's. You need a method, you need the right money management, and you need the right mindset. Now, if I may ask you as participants of this webinar, how much money or time how much did you spend to earn your money? How much time did you spend to earn your money? And how much time did you spend to manage your money? Think about that. A lot of people spend a lot of time earning money, but very few spend money or manage the money instead? So this is an important question, I think. So please think about that one. Okay, let me go to part number 1. Analysis of the current conditions in financial markets. Well, in overview, we have interest rates dropping. This is a chart that tells us that nowadays in the United States and in the Western world, interest rates are below 0. That means if you have cash and you don't make any return on your cash, you have a big problem. Inflation is running hot, and the real inflation adjusted returns you get on your money are negative. That means you are losing money every day. So a lot of people invest in stock markets, but the challenge is that stock markets are running hot as well. This is a Buffett indicator. It's an indicator used by Warren Buffett, one of the most famous investors. And this Buffett indicator tells us that we are running hot on valuations. So the valuations are probably in an extreme area. This is a chart, so-called Shiller PE ratio, and it tells us about the valuation of the stock market. And the valuation of the stock market is near the highs of 2000. So it's almost at the highest level ever. Now, you also heard about commodities. Commodities are up, whatever you take, whether it's nickel or zinc, or even iron ore or copper or oil, everything is running hot. So that means the world we live in is getting more expensive. So prices are going up, which means your assets will go down in value. So if we take a look on where we are, it's very hard to say where we are in this curve. However, I think we are near the public phase of this chart, and the greed and delusion is coming next to us. We get really strange things going on in stock markets. You might or might not have heard about Rivian. We just had an IPO, went to the stock exchange. It's the competitor of Tesla. And now, in just 1 week time, this company, without producing any vehicle, just based on electric vehicle and the future stories, is valued as much as Volkswagen, who has a history of 70 years. So it's crazy. So it's something like, delusion, new paradigms. I think we are in that phase. Anyway, you can chart the history like 1929, and you see always at the end of a certain bull market, you see a blow-off phase, as we call it. You see a very, how you say that, a very crowded trade, where a lot of people do the same things. And I think we are now nearby some of these very interesting charts showing us that we are very nearby a top, I think, in the markets. Mr. Buffett himself told us about it, and he said people start being interested in something because it's going up, not because they understand it or anything else. But the guy next door, who they know is dumber than they are, is getting rich and they aren't. So their spouse is saying, hey, can't you figure it out too? It's so contagious. So that's a permanent part of the system. So I think this is really a good way of describing the current situation. It's like fear of missing out, FOMO, fear of missing out, not being involved. So therefore, people do things with their money that might not be so clever to do. But markets are maybe irrational now, but one of these days, a very well-known economist like John Maynard Keynes said, markets can remain irrational longer than you can remain solvent. And I think that's true as well. Markets can stay longer irrational than we all think it will be. How I judge the current situation? Well, basically, the public or the mass is moving into the market. Everybody is suddenly a pro. Certain pockets of the market are definitely overvalued, but on the other hand, certain pockets are definitely undervalued. So there are chances as well. An important driver of the most recent stock market upturn is preparing a U-turn. They have to change their strategy, which is, in this case, the central banks. And they are getting squeezed a bit because they thought inflation is only going up temporarily, but maybe it's not so temporary as they think it is. And if that's not the case, then they might need to respond with raising interest rates. And raising interest rates, yeah, that's a completely different story than what we had over the last 10, 12 years. Now, is that the end of the world? No, definitely not. But it has some impact, and you need to be aware of the situation where we're in right now. Now, making return on your money was never easy. Sometimes it looks like it, like in the last couple of years, it looks like making very easy. If you are a Western world investor, everything went up, whether it was real estate, stock market, bonds, everything went up. Now, the point is, will this go up forever? The question is, yeah, of course, you can understand it will never go up forever. So there will be different times and maybe different times ahead. So you have to prepare, and you need a very good strategy to beat the markets in the next decade, I guess. So the last decade was profitable for almost everything, but history, however, learns a different lesson. And the challenge is basically, like always, making a decent return without too much exposure or too much risk. Now, we've been thinking about this challenge, and I want to introduce you a little bit later on to our strategy. For now, I want to maybe confront you with the question, what's your strategy now? Do you have a strategy already, or are you still looking for something? Well, if this is your strategy, it's definitely a bad strategy. There were better times, because loving this this strategy, which is savings, is not the way ahead. What are the champions? Well, we are the champions, and the champions are stocks. Stocks for the last 200 years went up from basically nowhere. From $1 in 1800, it would have been 1 million in 200 years time. Now, this is an important message. So stock market investments was over a longer term period was definitely the best strategy for your money. However, a lot of people put money in a bank account, which is basically the blue line. For instance, $1 of 1800 was $1, but now you can only have a purchasing power of 5 cents, which basically everything evaporated. Gold, yes, it's interesting, but not so interesting over time. Putting money in the bank, like in deposits, it will bring you some interest rates, but over time, it's not that fantastic. Bonds, investing in loans of companies or countries, was not bad, but not so spectacular. What is spectacular, however, over time is stocks. Now, if you make a calculation, it is like 6.7% real return on stocks as an average. Now, an average is a difficult word to understand. Average means there are good times and there are bad times, and the average is fine. Now, why is this so important to understand this chart? It is because what Albert Einstein said, compound interest is the 8 wonders of the world. He who understands it earns it. He who doesn't pays for it, which means that if you invest and you have a long-term horizon, and then the 6.7% on average each year will bring you the returns after 30-40 years probably. Okay, not within 3-4 years, or not within 3-4 months. So you have to understand that this takes time. Now, hopefully, and I can't check that, but hopefully a lot of you are in the younger age. I'm already a dinosaur, so I'm about to become 60 years old. So that means my time is running out. Hopefully your time is still there. Now, if you still have time, you have a very important asset, because if you take a look on this chart, you can see the S&P 500, which is basically based on the 500 most important companies in the United States. Now, if you started in 1990, that was more than 30 years ago. In 1990, in the first 10 years, basically nothing happened. Okay, so sorry, the first few years nothing happened, but then it took off. Like 95 until 2000, it went up almost parabolic. Then anywhere between 2000 and 2010, nothing happened. It was sideways, and there were huge dips. So if you were involved in 2008, you would have lost 50%. If you would have been involved in 2000, you would have lost 50%. So it's not only clear blue skies and going up, 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 up. That's what we saw, and that's what we see for almost the last 10 years. Since the credit crisis, the global financial crisis in 2009, we went up like we've never seen before. Now, again, some people think this might continue forever, but I'm a bit more skeptical in this respect. And basically, the reason that we go up parabolic now is just because of central banks printing money, bringing interest rates down, and there is no alternative. So everybody has to go to the financial markets to make a return. Now, we have to be aware of the fact that there is risk involved. Okay, it might not look like this, but in 2000, the Nasdaq was around 5,000 points. It went down to less than 1,000, which is 80% drop. And if you're involved with your money, and this might happen again, I'm not telling here that the end of the world is near, but I'm all telling you and showing you that there is risk involved. And a lot of people tend to forget about risk since we are for 10 years going up, 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 up. Now, also in the Netherlands, we see the stock market going up. However, is that the case in China? Remarkably enough, we've seen a bad year in China now. So it's not everywhere, but in the Western world, prices are going up, up, up. To me, China stock index is delivering a very interesting opportunity. I've been looking into a company like, for instance, Tencent. I've been looking into a company like, for instance, Baidu. Came with some quarterly results yesterday. Stock was dropping 8%. To me, that's an opportunity. In the coming months, I believe that there is an opportunity coming, for instance, in this certain pockets in the market, and China is definitely an opportunity for me. Volatility, it's also a very important figure, which is basically now quiet. So that means there's a lot of trusts, but it can go up very quickly and it can have a damaging impact. Now, it could be that you are already investing in stocks or in other pockets of the financial markets, but it could also be that you missed this opportunity. Now, that's of course bad luck. However, you still have time. Now, the question is, make use of your biggest assets. So you have to think about, how is it that I'm going forward? Otherwise, it might be that you end up with something that you're not so satisfied with in the end. So what is your strategy? Some people say investing is about choosing the right asset mix. And of course, now I cannot teach you everything. I don't know what you know or what you don't know. But an asset mix is something which looks like something like this. A lot of people will tell you, hey, you need a bit of cash, you need some equities, stocks, you need international equities, you need US equities, whatever, maybe emerging markets equities. I'm a favor of emerging market equities. You need maybe fixed income, which is bonds. Then you need a little bit of gold and some alternatives. This might look like a very reasonable way of diversification your money. However, this asset mix, as an example, that worked pretty well the last 10 years. The last decade, this worked perfectly. Why did it work so perfectly? Because a large part of every asset mix is bonds. And bonds, I don't know what you know or don't know about it, but bonds will respond to interest rates, which means if interest rates go down, bonds go up. But now we have the situation that interest rates are near zero. So if now interest rates are going up, that means bonds are going down. If you have 30% of your asset mix in bonds, that means you are vulnerable. So you have to think about that one. If you now go into equities after 10 years of up, and you still invest in equities, and equities go down for 10, 20, 30, 40, 50, I don't know how much percent it could be, then what happens with your money? So this whole asset mix strategy is definitely vulnerable. So I have a better idea. Instead of using this traditional way of putting your money at work, I think there is a better strategy to your money for now. So you need to diversify. Yes, of course you need to diversify, but a lot of people don't know what diversification means and whether that would have helped in the past. Now, in the past, we've seen two periods that were really critical, which is, first of all, 2000, 2003. And basically what you can see here, emerging markets, large caps, small caps, big companies, small companies, international small, European equities, even real estate, which is a REIT, was going down, down, down. In 2000, 2003, basically everything went down. Then we see the global financial crisis. We see the same. So whether you are diversified, whether you have a nice asset mix, like everybody will tell you, the bank will tell you, the asset managers will tell you, hey, you need to diversify. You need quality and you need time. Okay, time, I'm fine. Yes, you need time. Over time, you will make your profits. You need to diversify. Yes, in a certain way, you need to diversify. However, if you think I am diversified, I have a nice asset mix, I'm done, I will tell you, you will have a hard time going forward. Okay, so you need to be aware of the fact that times changed and that probably you need a different strategy. So what this chart shows you, the lessons from the past are that basically in the global financial crisis, everything went down. Even real estate went down 60, 70%. A lot of people forget about that. So there is always risk involved. Now the question is, if you can handle a drop like 10%, I think, yes, you must be able to handle a drop like 10%, like 20%. Yes, you have to. In every strategy, even in our strategy, we need to handle a dip like 10, 20%. That's normal. However, the question is, can you handle a drop like 30, 40, 50 to 60%? I think you should not. Even if you think you can handle it, you should not be exposed to a possibility that you lose 30, 40, 50, 60% of your money. Because it's very hard to come back. After you lose 50%, you need 100% return to get back to break even. So you have to be aware of the fact that also things like this can happen. This is a chart that tells you something. Worldwide stock portfolio performance over the period 1994-2014. That's also a 20-year period. Now in the 1990s, stocks went up like crazy, but then it went down like 62%. This is a portfolio of 150, a well-diversified portfolio, and it went down 62%. Then the global financial crisis came in 2007, 2009. Now just imagine that you are here with your money and you suddenly lose 58%. Now it might take years before you can come back. And people who invested in 2000, they still are waiting, for instance, to come back. Or Japanese investors, for instance, the Japanese Nikkei index, they had the highest, the all-time high was in 1989 at 40,000. Currently, the Nikkei index stands at 22,000, which means, at 30,000, which means that we are still maybe 25% below the high of 1989. So that message is rarely seen on TV or in advertisements. Okay, everybody tells you about the great returns of the last couple of years. Now I'm a bit more critical about these communications, so I want to tell you the truth and I want to show you what really happened. So will diversification work in the future? Yes, but please make sure the key to a successful diversification strategy is to ensure that your assets are in a portfolio that are not correlated to one another. So a lot of people, they think, oh yeah, I have a bit of real estate, I have a bit of stocks, and I have this asset manager, and I maybe do a bit over there, but a lot of it is correlated. Now, if you have a lot of correlation in your portfolio, you are vulnerable. Okay, so you have to make sure that you get the right diversification. Now, the other thing is, if you get a certain drop, just think about losing 30% in every 10 years. Just, okay, you run your portfolio at 8%, 8%, 8%, 8%, and suddenly you have a drop of 30%. Now, if this happens in the next 30 years, it happens to you 3 times, you can see where you end up. You end up with an average of 3.4% per year. So the impact of a drop like, for instance, 30%, even if it's only once every 10 years, it is substantial. So you need to probably follow this rule. Rule number 1 is never lose money. Rule number 2 is never forget about rule number 1. That's not my message. That's the message of Warren Buffett. Now, what is our strategy? How do we approach the markets? Well, first of all, the secret to success in investing is, first of all, look for an asymmetrical risk-return profile. 2, create a strategy that has a large chance to return a profit within a broad range, not necessarily look for the highest return. And number 3, protect your investments at all times. You will never know when the next drop in the stock market or in the financial markets will come. I've been running investment portfolios like 30, 35 years. And there's always something else going on in the world. Okay, something you don't expect suddenly comes up. So you have to make sure that you know that, first of all, everything is possible. Anything can happen. And basically, number 2 is you never know when or what is going to happen next. Now, what is then the implication for your strategy? If this is really true, everything is possible and I don't know anything. I think for me that is true. And I think it took me a long time before I get these insights. Just these 2 basic things. This is what I teach people. First of all, please understand that anything can happen. No matter you have 35 years of experience, you know everything, you're a professor in blah, blah, blah. Doesn't matter. You don't know what's coming next because it's the future. We don't know what the future will bring. There's always risk involved. Now, a very interesting book is written by Nicholas Taleb. It's called The Black Swan. And The Black Swan tells us about the probability of outsized events And it's much higher than normally predicted in statistics. So we have to be aware of where is the risk in the financial markets. It's always about risk reward. Now, this is a Dutch written, kunt u zich verzekeren met opties tegen brand. Now, if you talk Chinese, to me it's like if I talk Dutch for you once you are a native Chinese speaker, it's very hard to understand. So I'm very sorry, but this picture is part of our education program. And all it says is protect your assets. Like you protect your house against fire, you take a fire insurance policy. Now, a lot of people don't know that, but you can buy insurances on stocks. So what would happen if you buy, for instance, 100 shares of Ahold? Ahold is the big supermarket chain in the Netherlands, and bol.com, you might or might not be aware of that. But just as a little example, okay, if you buy 100 shares at 24, your investment is 2,400 euros. Now you buy an insurance against a drop in the price. We call that a put option. And let's say that you protect your asset at 22. So the market is at 24. You get a put option at 22, which gives you a 1 year right to exercise your right within 1 year. And it makes sure that you always can sell your assets at 22. So you can always sell your stock at 22. But however, today you buy them for 24. You can sell them at 22. So that brings the risk down to 2. So now you have a little bit less than 10% risk. Now that's okay, 10% risk for 1 year, that's fine. Now the good news is that you have to pay a premium. It will cost you money. If you protect your assets, it will cost you money. Now let's say that would cost you €1 per share. That means your share price is 24, the strike price of your option is 22, which means you have a risk of €2 per share. Okay, but the good news is also that you as a shareholder will receive dividend. That means if you receive a dividend of €1 or €1, sorry for the dollar, €1 per share, that means that the premium of the insurance is taken care of by the dividend you receive. So basically your risk is still €2 a share, which is just a very simple example of protecting your assets. Like you have a house, you buy a fire insurance policy. On the other hand, you can also make a return on an asset even if the price is not rising. Now, what would happen if you have a house of 500K and I come by and say, listen, I want the right to buy a house at 550 for the next year. I want a 1 year call option. I want to call your house. I want to buy a house at 550. Now it's at 500, but I want to have the right to buy it at 550. What would happen if I pay you a premium of 5K? That means I pay you a certain premium and you have the possibility to stay in your house for the next year, and I will only buy it once the price is above 550. Now, if nothing happened and the price is not going up for the next year, you will receive my premium. So basically you live in your house and you earn the 5K premium on your house. That's also possible with stocks. This is just an example. Now, what we do in our strategy, we basically have 2 strategies. First of all, we start with a defensive strategy for 80% of our money. We do wealth control. We have an actively managed portfolio whereby we actively manage the risk by buying put options, using call options to protect our money. Okay, we do this for the medium term. So we make strategies for a few months, basically less than a year. So within a year, we want to make a decent return, but we have a structure with a hard protection. Okay, so nothing like diversification. Diversification is fine, but it's not enough. So we need hard protection. That's one side. The other side, we like to trade. We like to be active. So we have a high potential. We take relatively small risks and we look for short-term deals, like probably for weeks or months. Now, this of course needs active management. Now, both of these 2 strategies, we teach people how to do it. So if you're more towards offensive trades, if you're more towards trading, we will teach you the trading part. If you're more towards defensive strategy, we explain to you how you can manage your own money by doing managing a defensive strategy. And of course, we can do both together in an education program. Now, for instance, how does it look like? Now, one of the things that we we make simulations of every strategy. So once we take a certain part of our portfolio and put it into a strategy, for instance, here we take Royal Dutch. oil company in the Netherlands, one of the big oil companies in the world. If we want to invest in the oil company, we can of course invest like everybody is doing, buy the stock, and you go up forever if it's going up, but you go down forever, it's going down. It's the blue line. Now we try to be a little bit more creative. So we take another perspective and we say, okay, if the price is going up, that's fine. We want to profit as well. We don't need like 20%. We are fine with 10 or 15 or 12. That's fine with us. Okay. So you see the red line, our strategy, not following the blue line. So when the market is going up, we will definitely not beat the market. Okay. We will lag. We will be behind the market. However, it's a very important point. In a defensive strategy, we like to protect our money. Not by saying, oh yeah, it's a great company and the stock will profit from blah, 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 and it will go up because all prices will go up because blah, 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 etc. No, we don't believe that. Yes, we have a view, we have an idea about what's going to happen next, but we never know for sure. So we want to protect. And what we do is we buy like the fire insurance company. We like to protect our assets by just buying some protection. Now, if we buy this protection, it will cost us return, which is basically here the reason why we lag the market up is because we like to do it better if the market trades down. So if the market's going down, we like to protect our money, in this case by the red line. And you can see now for the next year, I'm protected. So I'm not losing money more than, let's say, 8%, no matter what happens to the stock. Even if the stock crashes and it goes from 16 to 8, I still lose 8% and not 50%. And 8%, next time I can make up for 8%, but 50%, making up for 50% requires 100% return. So now what we do, we manage portfolios. So we do this like for 10,000, for 50,000, for 100K, for 250K. But just as an example, what I want to show you here is that since 2012, we manage this portfolio and people can track what we do. Okay, we want to be transparent. This is all recorded. Everything we mentioned from the start in 2011 is on our website. Everything we said, all our analysis and all our trades and strategies are on the website. Now, what is important to give you a little bit of an idea, this is a very recent thing I'm running right now. This is an example of a strategy that I made over this weekend. And this weekend, I was thinking about NVIDIA. You might or might not know what NVIDIA is. NVIDIA is one of the big companies in the gaming industry with cards, in the crypto industry with making chips. Okay, so it's one of the leading companies in the world. Now, yesterday evening, NVIDIA came with their quarterly results. Now, quarterly results is always a bit like a casino moment, I call it. You never know what they're going to tell you. It could be a big explosion to the upside, could be a big downside. You never know what's going on. Now, but what would happen if you take a few $100s, let's say you have $300, a small trade, just as an example. Now, I take $300 and I try to, as an investment, and I try to make a return on a very short time. This is expiring, this strategy is expiring next Friday. So it's basically tomorrow evening. Now here, I run the risk. The stock was trading at 300. My feeling was that we probably have good news from the company and the stock will probably trade up. And not that much further than 350. My feeling was that it's anywhere above 300, 320, 340 area. So that was the case. Now, if this vision is okay, and hopefully it will, right now it's trading up 8%, by the way, before the market opens at 330, it's now trading at 317. So if the stock is at 317, that means that my little investment, my little trade in this case, would bring me $400, $500. Okay. Now, if I was wrong, I would potentially lose no more than $400. So there is a maximum to my risk. And that would only happen if the stock would drop like 10 or 20%. Now, this to me is what trading is all about. It's looking for a decent upside. Now, this is about making from 300, making $500. If this would be the case tomorrow evening, of course, we are not there yet. But if that would be the case, I will make a return of maybe 100, 150% on my money. Now, of course, let's be realistic. If I lose all the 300, that's 100% loss of my investment. that's fine, because I know what I'm doing, and I have an asymmetrical risk return. That means if I make money, I can make 500. I could even make 1,000 or 1,100. So if I'm right, I can make 1,000. If I'm wrong, I lose 400. Now 400 compared to 1,100. That's what I mean with an asymmetrical risk return in your trading, for instance. This is what I always look for. So yes, you can say, oh, it's a great company, I buy the stock, but then you run the risk with $300. Why would I do that? If I can do it with a smaller portion, I can make certain strategies. So this was my strategy. Everybody can take a look at it. It's a complex one, so I have to teach people what I do here. It's not straightforward, but it's open. This is what I have. This is my position. You can make a copy of it, and you can take a look on what happens tomorrow evening, and you can see whether I make or I lose money. But another example, I'm also running a position now in Facebook. What I use is I use charts. Why do I use charts? Because they tell me what probably the next direction of the move is. Is there a trend up? Is there a trend down? What is a good moment to step in? Now, I've been looking at charts for all my life, and I try to make a strategy. Now, here's a bit more money involved. It's like $1,500, and I try to double it, like 3,000. What should happen? Over the next couple of months, until March, the price of the Facebook stock should go up towards, let's say, 380, 400. When that's the case, my investment of this case of let's say 1,500 will double. Okay, so yeah, again, there's so much to tell you, there's so much to learn, there's so much to explain, but all I'm trying to tell you here is that I'm thinking about risk return profiles all the time. So I'm not the guy who says, this is a great company, let's buy some stock, this is a great company, let's buy some stock, let's diversify, let's have a very nice portfolio, and then wait until the market takes it up. That to me is fine, but since we have this 10-12 year up market, I want to know for sure, and I want to protect my investments at all time. Okay, so this is a different strategy than most people do. So I work with heat maps, and I look into what's my risk. My risk is whatever happens. If Facebook is going down, my risk is maximum $1,600. If the market goes up like this, my profit is double it. So I have a very interesting risk return profile. So I make much more money when the market when the stock is going up 20 or 30%, than I will lose when the market is trading down 20 or 30%. So this is the way I want people to learn and to teach them about how to invest your money. So I think over time, this is another portfolio we run. This is more a little bit for small investments. People, not everyone has the millions in the bank account, and I want to be there for everyone. I want to help everyone to make a better, more return on their money. So this is what we do. We do a trading portfolio of 10K. What we do, basically, the average investment in a trading portfolio is like maybe 150 or 200 euros. So that's a very small pot. We never try to lose more than 2, max 3% of our money in one trade. Okay. And of course, I will have losing trades. Let's be sure. The hit ratio, this is what we measure. In some years, like for instance, in 2015, we had 48% hit ratio, which means I had 48% of the trades were profitable, 50% or 51% was losing. So in this year, I had really nothing. There was nothing in the bank account. There was no profit. We were basically flat. However, in a year like 2018, we suddenly have a 72% hit ratio. So that was a much bigger year. And in this years, we have 7 out of 10 trades went into profit. 3 out of 10 went into a loss. But the overall picture is, and I hope you can understand that, that's not about only the hit ratio. You cannot be correct 100% of the time. Nobody can, okay? And even if you have a hit ratio of 50%, which is just average, you can still make money. So this is important. So this is the reason why, no matter what kind of strategies we do on a portfolio basis, for big portfolios like million plus portfolios, we have strategies, but also strategies for smaller accounts. So yeah, it's very important that you learn and that you earn from trends and patterns in financial markets. That's what we try to help you with as well. So I hope I give you a little bit of insight in a nutshell about what we do and why we do and what the challenges are going forward. So now I'm more than willing to take your questions whenever they are, whatever they are.
Great. First of all, thank you, Andre. And in such a short time, 15 minutes.
Yeah, I'm sorry, I have to speak fast.
Yeah, yeah.
But people like Chinese, they if I look at Chinese people, they're always fast. If I go to, they're really quick. They're very efficient. I like the energy.
Yeah, so in general, a very efficient person, especially also the person in the stock market, they're even more efficient. Yeah. So
yeah.
I know actually for I already collected 2 questions from our survey.
Yes.
But before that, I know Robert. So Robert, Xuzhen, yeah. So before you enter in, Xuzhen, like Robert was actually speaking with me and about his motivation for joining today's, the networking
program.
Time. Yeah, the program. Yeah, for him is he want to really like maybe Robert, you want to like ask a question directly to Andre.
Yes, please.
Yes. Hi, Andrew. It's
hello, Robert.
I want to ask you about some information about the Bitcoins. But do you know? Maybe you know, it's in China, the government is forbidden the Bitcoin mining. Trading. But in Europe and in America, this Bitcoin is more and more is accepted by the big companies such as the platforms for the e-commerce. So I want to ask, how do you think the Bitcoin? What's the direction or the trend of this kind of these things will go better or it will be worse in the future?
I'm pretty positive about Bitcoin and Ether and all kind of developments with blockchain technology. I think, to be honest, until 2017, I thought this was all like a bubble. Okay, I didn't take it serious until then, because I thought I didn't understand it either. I didn't take the effort to understand what was really going on. So people tried to explain to me and said, yeah, fine, Bitcoin, I don't understand, too complicated. Let's stick to the things that I understand, okay? However, I thought in 2017, literally, I was eating with a very good restaurant here in Monnikendam where I live. It's called Four Seasons. It's a very good restaurant, Chinese restaurant. And also everybody, I know the owner, and he said, yeah, Andre, what about this? I said, forget about Bitcoin. He said, yeah, but I make money and I do. I said, yeah, okay, it's all fine, but I don't believe in it. Then the market went down because everybody was involved. Mass behavior again at the end of the curve. Then the price dropped, and I said, okay, now forget about Bitcoin, next chapter, okay? But then it came back. And I was surprised. I found it a surprise that, hey, how come that it comes back? And it went down again, and it came back again. And now it's currently trading at the highs. And I now, for the last couple of months, I've been reading a bit more into the subject. And I think that there is definitely for blockchain technology that will never go away. It will be more and more blockchain technology. Now, the store of value, that is what Bitcoin is. Store of value is increasing. And I think there's a role for Bitcoin to stay. Like in gold, I think the modern type of gold could be Bitcoin, okay? That's a store of value. Now, Ether, for instance, Ethereum, I am having my own mining machines. I know that's not allowed in China, but it's allowed in the Western world. And I have been running a mining machine myself on Ethereum. Why? Because I think Ethereum is one of the platforms that will be used in the future. So I'm positive about Bitcoin. I'm positive about Ethereum. However, I'm not the expert here. Okay, I'm definitely not the expert. I recently contacted an expert, which made a lot of money in cryptos, but he also has a very good understanding of what crypto can do. And I think what he told me and what I understood so far, I think there is a role for this. However, what is it that I do? I invest in ETFs in blockchain. I invest in ETFs in Bitcoin, and there is an ETF in Ethereum. And most recently, I came across for a very interesting company, a small company running out of Toronto, in Canada. And I can tell you, for now, I don't want to tell you more about it, but I'm looking into this company because they are mining. So they are mining Bitcoins at a very efficient way. Now, I think that's also an opportunity. So invest in a company like this or a blockchain company, invest in ETFs, but I will only do this for maximum 3 to 5% of my portfolio. Okay, so in that respect, I'm still a bit skeptical. I'm not convinced. I know there are people who put 50% of their money into cryptos. I will probably never do that because that's too much risk for me. But 3 to 5%, yes, I want to be involved.
Oh, yeah.
Okay.
Thank you so much.
And there are a few possibilities to invest in a decent way without opening an account with, I mean, the point is this, there's so much going on. It's a new environment and you need to also be a bit skeptical, okay? Because everybody tells you big stories about making huge returns. And of course it can be made, I understand that, but you can also lose a lot. So you have to be a bit more skeptical in this respect, I guess.
Yeah.
Okay.
Yeah, it's
Thank you so
interesting.
much.
I hear you're enthusiastic, but you also like, you know, kind of like not more than 3 to 5% in the portfolio, right?
Yeah. Because the point is this, what I just showed you in the strategies, it's possible for me to protect my own money. Now, if I invest in real estate, I cannot protect the value of my real estate. If I invest in a company, I cannot protect if I own a hotel and I buy an hotel and the hotel is going down for whatever reason, may COVID or may anything else may happen, there is no put option. I cannot buy an insurance, okay, to protect my wealth. In the stock market, I can. So to me, that makes completely sense that if I want to protect my money, and I need to protect my money, why? Because I don't know what happens next in the future and anything can happen. So what I learned over time is please protect your money. And there's a big way that you can do that if you learn how to use a strategy like that. So why would I just put 50% of my money in crypto and then cannot protect my 50%? Okay, so yes, if I want to be involved in crypto and I cannot protect it, I will do 3 or 5%. If I lose 5%, okay, I'm not happy, but that's okay. But if I lose 50%, that's not okay. Okay,
yes,
I'm wiped out.
It's still like a risk control, and even though it's a small return, but still it's a return.
Yeah, and exactly. And even if I trade, I showed you, I risk 200 to make 400, 500, 600. Okay, this is the way you should trade. It's not like, oh yeah, let's go all in and then see what happens. To me, that's definitely not going to work. And of course, a lot of people make money like that, and then they think they are king of the world because they made a lot of money. But that's like running into a casino and saying, hey, you can make money in a casino. Well, I know for sure there's only one guy who wins in the casino, which is the owner of the casino. Nobody else.
Yes, got it. Yeah. Okay, now because I saw Yang Dan was raising the hand and her hand is pulling off. So Yang Dan, yes. So probably she was getting the muscle sore, raising too long.
Okay.
Hi Dan, can you hear us?
Yes, I can. Actually, I had a question, but I think Angie just gave certain answer for it, so that's why
you wanted to visit the casino, Dan?
No, I'm not interested in the gambling, those kind of thing. Actually, my question is already invested a bit on the stocks and had some positive return, but I only invested on the market I'm quite familiar with, which is relevant to my work.
Right.
But I just I agree with one of the strategy you just mentioned is we need to make a broad investment on different stocks or something else, and to not other than just getting highest return. So I'm just wondering how I can gain more knowledge or know better other industry and to broaden my investments.
Yeah, I understand.
So
well, first of all, I think you are very clever by just investing in what you know about. Okay, I like that idea. Okay, so but also it gives you the limitations. I can understand that. So now
exactly.
Okay, but if I need to diversify, how is it that I'm going to do? Now, to tell you, it's like it's very hard because it's not possible that you have as much knowledge as you have in your own field in other fields. That's impossible. Okay, let's be sure. I mean, I know a bit of everything, but I can't be an expert in everything. That's for everyone. Everybody is the same thing. So the only thing I can tell you then is, then you need to diversify. If you believe in that strategy, buy, for instance, ETFs. ETF stands for Exchange Traded Funds, which is an instrument. It's quite popular in the markets right now. It became popular the last 5 to 10 years. And it basically is that you buy a portfolio of companies, of stocks, okay? So, for instance, if you want the S&P 500, the big companies in the United States are all in this index. Now, it's very hard for private investors to buy 500 companies in your portfolio. So what you do is you buy the ETF S&P 500. And it basically what it does is maybe for, let's say, $100, you can buy one share. Now, if you have $100 underlying, you have many pieces of all these 500 companies. So that's a way of getting diversification. It's a way of getting involved into other companies without running too much, without being too complicated. Now, so that's an important thing. Now, if you say, oh, robotica is the future, or 5G is the future, or I like to invest in sustainability, or I like to invest in cryptos, or whatever, there are all kinds of ETFs available. It's a jungle out there. There's so much. It's really a lot to offer. But this would be the way going forward if you would say, okay, I want to diversify a bit and I want to buy some other ETFs. That's probably the most easiest way to do it. Again, it's not to be clear, it's not my strategy. Okay, nothing wrong with that. All I'm saying to you is, even if you have this broad diversification, please be aware of the fact that if the markets go down, everything goes down. That's basically the lesson from the past. So if you want to protect for that, you need a different strategy, and this is where my approach comes into.
Yeah, so you suggest the strategy shall be verified according to different circumstances.
No, but what I'm again, I don't know whether this is clear, but what I'm trying to do is what I saw in the past. Again, that in terms of crisis, if stock markets go down, okay, whether you have diversification, whether you have the big qualities in your field, all these companies will suffer, okay? Because in the end, diversification will not be enough to protect your money. That's the lesson. Diversification will not be enough to protect your money. Now, if you want to protect your money, if you think that is important, I believe that's very important. So therefore, I always put insurance underneath my investments to make sure that I know upfront, I don't want to lose more than I want to lose. I don't want to lose more than I want to lose. And I want to be 100% sure. The only way that I'm sure is buying insurance. And that's possible. However, that takes a certain knowledge. You have to learn about this. You have to understand what I'm doing. And that unfortunately takes time. Okay, I cannot explain everything in 50 minutes or 1 hour time. But what I'm offering now, and that's what I discussed with Gabi, she says, yeah, but it might be interesting for people. I said, I'm more than willing. We've not running an international course on this one because we are focused on the Dutch market. But I said, as an experiment for next year, if there's enough people who are interested, they can run a 1-year course together with me. Okay, and I will manage the portfolio as an example. I will show them what I do, whether it be trades or defensive strategies. I will show them what I do with my money. I will explain every move I do. And I will teach people what the reason is why I do what I do. So after 1 year, they should be able to run their own portfolio. Okay, so this is what I'm offering. This is what I call the 1-year coaching program. And feel free if you want to have more information, talk to Gabi, talk to Wen, whatever, and let me know. But this is all I can do for now.
Yeah, thanks very much.
Okay. Awesome. Yeah, indeed, Andrew, you're right. Yang Dan, she's a very smart lady. Yeah, and
must be if you and again, Wen, if sorry, Dan, was it okay?
Yeah.
I guess I forgot the name. Excuse me.
No problem.
but yeah, Dan, I think she's really smart because I believe in the fact that you only do what you understand. If you don't, this is what I'm telling people all the time. If you don't understand what people are doing with your money, okay, don't do it, because sooner or later you will lose confidence. In good times, you think, oh, they can make money. And this is the reason why we want to be transparent. This is the reason why I'm into education. A lot of people, they trust the bank. They bring the money to the bank and say, okay, goodbye. I go to the golf course and I want to have a happy, nice life. I don't believe in that. You need to understand what is the strategy in good times and in bad times. And if you don't understand, sooner or later, you will have a problem. So this is the reason why I do my education. This is the reason why I want to tell. And I like the fact that she says I only did my investments in an area where I understood what these people are doing or what these companies are doing. So therefore you're smart.
Yeah, indeed, like you don't need to play the game, but you should know the game. Yes.
Yeah, okay. That's a good one. That's a good one. I like that. Please record that one.
Thank you.
Now we got another lady raising the hand, Shuai. Yeah, and Andrew, I think after like now you are connecting with the Chinese community, I believe your Chinese word is also increasing every time. So, hi, Shuai.
Yeah, actually, I'm not a lady.
Sorry.
It's okay. So good afternoon.
Good afternoon.
Actually, I have a question, maybe not 100% investment related. So it's about the Dutch real estate housing price recently.
Right. Yeah.
What do you think will be in the next 2 years or 3 years, the Dutch housing price gonna rise or fall? And because I'm a young expat, now I'm considered to buy a first house in the Netherlands. And what's your suggestion, for example, apartment, house, or etc.?
Okay, now you have to wait. I have to first buy my crystal ball to tell you what's going to happen in the next 3 to 4 years. Huh? No, it's a difficult question. Of course, there are a few things to say here, I guess. Well, first of all, we have the environment with the central banks. A very important driver for housing prices is interest rates. Now, interest rates were going down, 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 down. So therefore, a lot of more people could afford a house, and they could also get a bigger loan for their apartments or for the houses. Then we have the situation of supply and demand. Okay, there's much more demand than there is supply in the Netherlands. And that cannot be fixed in the next couple of years. That's probably takes a 10-year strategy to fix that. So you would say, since there is much more demand than supply, it would be a good thing to buy an apartment or buy in a house. Now we have COVID. COVID made a lot of people aware that if you are in your apartment and you need to work from home, you would better be, you can live everywhere. So why would you need to live in Amsterdam in a crowded place if you could live in Drenthe in a nice landscape with trees and forest and water and blah, 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 instead of crowded place in Amsterdam. So people got more aware of that as well. We see that tendency coming in. Then there is one tricky one, which I think you should be aware of as well. If you buy something in Amsterdam, please be aware of the fact that there is a huge problem in Amsterdam, which not everyone is aware of, which has to do with the canals. Okay, the canals and all the traffic that go through the canals, they put pressure on the how you call that in English, not on the dikes, but on the walls, who protect you against the water. Now, a study has been done, and if you take a look on what has to be done in the next couple years, basically all of Amsterdam has to be refurbished with better protection against the canals. So that will be a big issue, could be a very big issue in Amsterdam specifically. Okay, so it's very hard for me to say, oh yeah, it's great, buy an apartment in Amsterdam and everything will be fine. I would be a bit more critical about that. Real estate in general, we had a tremendous good years, but I think there is a maximum to it as well, and the maximum has to do with, in this case, inflation and loans, and also on the other hand with the salaries of people. So to a certain extent, people can afford to pay for rents, but there is a limit to that. Now, if inflation kicks in and inflation drives up prices, the question is, will it spill over into the salaries of people? If we have that, then it's all fine for real estate. If we don't have that, then I think real estate then we're probably near a ceiling for now. So yeah, that is my feeling. So overall, I would not buy an apartment in Amsterdam now, to be honest. Maybe in somewhere else. But I would look for probably better opportunities anywhere around in the country. But then the problem is there is nothing for sale for now. So it's still an overheated market. And I don't like to buy in an overheated market. I like to buy when nobody wants to buy. And in a crowded market, I want to stay away. I don't think that's a good idea. Whether it's a stock market or real estate, I don't want to be involved in a crowded trade. It always ends up nasty. Where in general, what I saw is if huge masses are going into something, it's probably the worst thing to do. And to be honest, take a look on what happened in China. You can see the same behavior there 5 or 10 years ago. Everybody wants to be in, oh yeah, this is great. And you get speculation. We have this Evergrande problem now at hand, and also other companies. So you have to take that into account as well.
Yes, yes. So first of all, really thank you, Andrew. You also really provide your personal insight about real estate market, yeah. And however, now it's already like 11 minutes past our event, and we would like to have everybody question to be answered. But I myself also have to leave the meeting.
Yeah, but I have to take the call, the medical call.
So how about this? Yeah. So Andy, are you also in our WeChat group? Please join our group and send you the message and your question there, and we will get your question to be answered. In the meantime, we will also share with you about this record so you can continue to study. So, and maybe next, I will discuss with Andre and to say, for the coming month, and how can we run, right, this seminar, and in the more regular time, and have more people can participate with us, and create something with the more interactive there, but also content-rich sections. Yes, great. Okay. Yes, Andre, really thank you. Thank you for really preparing that.
You're welcome.
And, I really wish your mom her health will be more stable. And yes, already happy birthday. I will say that.
Thank you. That's a secret. That's a secret.
1 year younger again.
Now we all know the secret.
We all know that.
Happy birthday.
Thank you. Yes, next week. It takes 1 more week.
Yeah.
So hopefully I will make it until next week.
Of course you will.
Okay, very good.
Yeah.
Thank you all for it's very nice, very kind of you, very professional organization, Gabi. Thank you for that. And I'm more than willing to help you, and hope to see you soon, somehow, somewhere. Okay?
Definitely. Also, thank you for everyone, your participation and questions. And we make this even success. Thank you.
Right. Thank you, Gabi.
Okay. Bye-bye.
Bye. Thank you, Wen.
Ciao, ciao.
Bye.
Bye. Thanks.
Bye.
Bye-bye.